Hi, Assalamualaikum everyone. Today we would like to explain the operating segment and interim report. So the company that we choose is BONIA Corporation Berhad. BONIA Corporation is mainly focused in fashion retailing, marketing and manufacturing in branded leather and goods. Before we go more details, let me introduce myself first. My name is Ahmad Faris bin Abdullah and I'm one of the team leader of New Account Executive Management for our company BONIA Corporation Berhad. This presentation will be included two MFRS, which is MFRS 8 Segmental Reporting and MFRS 134 Interim Reporting. Before we start, we would like to introduce our other team members who are also the new account executive of BONIA Corporation Berhad.
Hi, my name is Amir Ashraf bin Sabri. I am one of the new account executive of BONIA Corporation Berhad.
Hi and Assalamualaikum. My name is Eman Shazon bin Zainadi. I am one of the new account executive for BONIA Corporation Berhad.
My name is Shafiq bin Shazali and I am one of the new account executive for BONIA Corporation Berhad.
So, we will start with our first part, which is part A, Segmental Reporting as MFRS 8.
First of all, I would like to introduce our company and I would like to tell about the company's background. First, BONIA Corporation Berhad is mainly focused on fashion retailing, marketing and manufacturing in branded leather goods. And when we talk about BONIA Corporation Berhad, we are talking about a big company where there is 833 sales outlets, 103 boutiques around the world covering Malaysia and also Southeast Asian countries and also Hong Kong and China. And another thing is, BONIA Group has provided high quality and fashion of leatherware, footwear, accessories for men and women. And for your information, BONIA was started in 1977. The person who is Mr. Chiang Sam was the founder of BONIA, but is currently executive chairman and also chief executive officer (CEO) in BONIA Group. It was because Mr. Chiang was inspired by the artwork of Gian Bologna in Italy. BONIA Group had expanded and had its own subsidiaries company such as CB Marketing Sdn Berhad, CB Holdings Malaysia Sdn Berhad, and SBL Marketing Sdn Berhad, and so on. So now the BONIA Group has added more international brands, which are Pierre Cardin, Brown Bruno, Mailly, Buffel, and Renoma to its collection of brands.
I'm going to talk about the management approach. There are three elements that cover under management approach, which is factors to consider: having a segment reporting, type of segmental, and identify the chief operating decision making and responsibilities. Let's go to the first element, which is factors to consider having a segmental reporting. It consists three factors. First is the nature of business activity. BONIA could produce report which is present business operation in a variety of different ways. BONIA engaged in design, development, manufacturing, and worldwide marketing and sales of branded leather, accessories, apparel, and equipment. Next is the existence of managers who are responsible for the activities. In most cases, an operational segment manager who reports directly to the CODM and evaluate the segment operation, financial performance, projection or goals. The phrase segment manager refers to a duty rather than a specific title for a manager. Last is the information presented to the board of directors. The characteristic could be applied to two or more overlapping sets of components for which managers are accountable. For example, in BONIA Corporation Berhad, some managers are in charge of global product and manufacturing, while others are in charge in specific geographical areas. In that case, the entity must use the core principle to decide which sets of components represents the operating segments.
There are 6 types of segment in BONIA Corporation Berhad, which are retailing, manufacturing, investment and property development, men's department, ladies department, and last one, lifestyle segmentation.
Next is about Chief of Decision Making (CODM) and its responsibility. CODM is not a person but rather a function. This function is responsible for allocating resources to operational segments and evaluating their performance. It might be the CEO, COO, senior management team or board of directors depending on the company. In BONIA Corporation Berhad, CODM is Chiang Sang Sam because he is responsible for the overall business development and formulating the group's strategic plans and policies.
Next, we move on to the process to identify the reportable segments and non-reportable segments. Okay, as we all know, not all the operating segments can be separately reported. Okay, the operating segments need to exceed the 10% threshold test first in order to recognize as reportable segments. So, in this 10% threshold test, there are three ways to identify whether the operating segment is reportable or not. So, the first way is revenue test. The revenue test means that revenue per segment is 10% or more than the total revenue of all the operating segments. The second way is results or profit. Result of profits means that total profit or loss per segment is 10% or more than the total profit of all the segments, or the 10% or more than the total loss of all the segments. And the last one, which is the assets. Total assets per segment is 10% or more than the total assets of all the operating segments. After that, if a segment does not meet the 10% threshold criteria, it can be designated as a reportable segment despite its size, but it needs to be combined with other similar segments that are also below the 10% threshold test. So, at the end, it will include it as an all other segments category. Next, for the 75% rules, after determining the reportable segment, the entity should ensure that the total external revenue attributable to those reportable segments is at least 75% of the entity's total revenue. To calculate the 75% rule, the formula is total external revenue for the reportable segment only per with total revenue for all the operating segments, and we will get at least 75% and above. If the 75% threshold is not met, additional reportable segments should be identified even if they do not meet the 10% threshold criteria, until at least 75% of the entity's total external revenue is included in its reportable segment.
As you can see, this is our operating segments, which first started with retailing, followed by manufacturing, and the third one, investment and property development, and the other three is men's department, lifestyle, and ladies department. For the 10% threshold test, we are using revenue test, where to calculate the 10% threshold test, we have to divide the total revenue of each of their segments, and we divide it with total revenue of all of the segments. So we will get for detailing, we get 44.29%. For manufacturing, we get 2.7%. For investment, property and development, we get 12.26%. Men's department, 12.28%. Lifestyle, 9.32%. And ladies department, we get 19.16%, which is concluded it is 100%. As a result, we can see that most of the operating segments is reportable segments, and only two segments is not the reportable segments, which is manufacturing and lifestyle, since both of them are below 10%. Moving on, to calculate the 75% threshold test, we have to use the formula of total external revenue from all reportable segments divided by total revenue from all segments. So, from that, we can get 784,066 ringgit divided by 991,328, which will get 79.1%. Since the threshold tests resulting in 79.1%, which is more than 75%. Therefore, the existence of reportable segments, which is retailing, investment and property development, men's department and also ladies department will remain as reportable segments, and there is no need for it to identify additional reportable segments.
So this is a new segmental report. As you can see, after we compute the 10% threshold test of every segment in BONIA Corporation Berhad, we must construct a new segmental report by referring the 10% threshold test. The retailing segment, investment and property development segment, men and ladies department, they have their own column and calculated separately. This is because these four segments meets the criteria of 10% threshold test. However, for manufacturing segment and lifestyle segment, they are combined together in one column. This is because they are not past the 10% threshold test conditions. This new segmental report is same with the previous one, but we just need to change some of the segment into their own calculations. Let's look at the last part of segmental reporting, which is the advantages and disadvantages of segment reporting. For the advantages of segment reporting, first is the honesty and better side. Segment reporting may disclose which sectors are successful and which are drains on the bottom of line. If segment reporting reveals that a company international activities are more successful than its home operation, it may induce a strategy shift. Second, the advantages it allows stakeholders to have a better understanding. For example, if a company's earnings are much greater than projected, segment reporting might reveal where those profits are coming from. Stakeholders can examine the same report to see if the figures are trustworthy. Third advantages is better analysis about risk and return of the company. It is stated that segment information help users of financial statement to comprehend the uncertainties surrounding the timing and quantity of expected cash flows, and hence the risk associated with an investment or a loan to a company that operates in a variety of industries and marketplaces. So we move to the disadvantages of segment reporting. First disadvantages is emphasized on the present. Segment reporting can place too much of a focus on a short-term numbers. For example, a business might create a segment just for its online work. That segment could run a significant deficit before the right people and infrastructure are in place. If these losses are outweighed by the company's overall performance, they might not stand out the financial statement.
We will move on to the next part where we will discuss about Part B, Interim Report, which is MFRS 134.
So, to start our Part B, I would like to explain about the basis of preparation of the interim report. But before that, I would like to explain what is interim financial report. So, an interim financial report is prepared on a consolidated basis if the entity's most recent annual financial statements were consolidated statements, and the parent separate financial statements are not consistent or comparable with the consolidated statements in the most recent annual financial report. And the interim report is divided by two, which is integral method and discrete method. So, what is integral method? The integral method is a fraction of annual report that is predominantly to predict and explain the financial information for the full financial year. And by using the integral method, this will result in arbitrary normalizing of income and expense. So, this could conceal actual results of operation and financial position in an interim report. And last but not least, it could also lead to recognition of deferred debits or deferred credits that do not meet the definition of assets or liabilities. So, for the next part, which is discrete method. Discrete method is different since the interim report is a separate period, since the reports are prepared on a periodic basis. In other words, it is the same principles to track incomplete transactions as the year end. The discrete method is used to predict and explain the financial position and the financial performance, and this result will be more useful in information to users of the financial statements for decision-making purposes.
Next, we move to accounting policies. The same accounting policies should be applied for interim reporting as are applied in the entity's annual financing statements, except for accounting policy changes made after the date of the most recent annual financing statements that are to be reflected in the next annual financing statements. There are some accounting policies used in preparing the interim report. Here are two accounting policies for this company, which are MFRS 116 Property, Plant and Equipment, and the second one is MFRS 16 Leases. For MFRS 116, all items of property, plant and equipment are initially measured at cost. Cost includes expenditure that is directly attributable to the acquisition of the asset. Depreciation is calculated to write off the cost of the assets to their residual values on a straight line basis over their estimated useful lives. The estimated useful lives represent common life expectancies applied in the industry within which the group operates. For MFRS 16, the right of use assets are initially measured at cost. The initial amount of the lease liabilities adjusted for any lease payments made at or before the commencement date of the leases. After initial recognition, right of use assets are stated at cost minus accumulated depreciation minus any accumulated impairment leases and adjusted for any remeasurement of the lease liabilities.
Let's look at the types of interim report prepared by the BONIA Corporation Berhad. There are 4 types of interim report prepared by the company. First report is an unaudited, condensed, consolidated statement of profit or loss and other comprehensive income. Second is unaudited, condensed, consolidated statement of financial position. Third report is unaudited, condensed, consolidated changes in equity, and the last report is unaudited, condensed, consolidated statement of cash flow.
Next, we move on to the period for the current and comparative for each statement. First of all, BONIA Corporation Berhad Interim Report is prepared by quarterly basis, year ended 30 June 2019. Okay, for the statement of profit or loss and other comprehensive income, current interim report for 3 months, it is started from 1 April 2019 until 30 June 2019. As for the 12th month, it is started from 1 July 2018 until 30 June 2019. As for the comparative, for 3 months, it is started from 1 April 2018 until 30 June 2018. As for the 12th month, it is started from 1 July 2017 until 30 June 2018. Okay, let's move on to the statement of financial position, statement of changes in equity, and statement of cash flow. As for these 3 current interim report, it is ended at 30 June 2019 from 1 July 2018 until 30 June 2019 for 12 months. As for the comparative, it is ended 30 June 2018. It is started from 1 July 2017 until 30 June 2018 for 12 months.
Now, we will look about adjustment proposed. The adjustment will be made upon the 4th quarter of 2019. There are 2 adjustments proposed made by BONIA Corporation Berhad, which are inventories and trade and other receivables. For the first adjustment is on 30th June 2019. The cost of inventories was 92,878,000 ringgit. Meanwhile, the net realizable value was 89,250,000 ringgit. The value of inventories should be used at the lower between cost and net realizable value. Thus, the inventories to be recognized in the statement of financial position is the net realizable value of 89,250,000 ringgit. For the second adjustment, as at 30th June 2019, the company estimated that the amount would only be 10% uncollectible. This means that the amount of account receivables to be collected is 90%. So, 70,967,000 ringgit times with 90% will get 63,870,300 ringgit. The 10% difference should be recognized as loss in statement of profit or loss. Thus, the amount that will be recognized in the statement of financial position is 63,870,300 ringgit. As mentioned before, the 10% which amounted to 70,967,000 ringgit is to be deducted against the original amount, leaving the estimated amount collectible to be 63,870,300 ringgit at the end of the fourth interim. Same goes to inventories. The written down value will be recognized as loss of inventories in statement of profit or loss. Thus, the amount of 3,628,000 ringgit is to be set off against the cost of inventories. So, here is how the adjustment affect the company's statement of financial position.
That's all from us. Thank you for listening.